everyone, welcome to the very first episode of the SubhShanti Podcast. Here, we'll try and flip the script on finance for you. The fearless, the bold, yet sometimes the quiet pursuit of something that we all crave for, financial peace of mind. You work very hard for every penny that you earn. Why not make that penny work harder, and not just harder, smart as well? I'm your host, Smriti, not a financial expert, but just someone who gets to ask the experts questions that you and I have been Googling. This podcast is brought to you by SubhShanti Wealth, one of East India's rising company in the financial landscape. No jargons, no fluff. Just clear, calm, and confident approach to helping you grow your wealth, one thoughtful step at a time. And today, we are kicking off things with the man who made all this possible, Mr. Sandeep Chhajer. He is the founder of SubhShanti Wealth. He has worked with many global giants like Hewlett-Packard, DSP BlackRock, and the likes. But now, he helps people understand the world of finance and investing. Sandeep, welcome to the SubhShanti Podcast. I'm glad we get to chat here.
Thank you so much for having me here. Looking forward to some interesting questions.
You know, starting something new always has that mix of excitement and butterflies. And I believe you had a comfortable life when you were working with companies. You had a regular income, a regular working hour. Things seemed settled, I believe. What made you take this leap and start a company all by yourself?
So, there are trigger points in everybody's life that help them take certain decisions.
So, very true.
Yeah. So for me, there was a trigger point, but before I tell you about the trigger point, let me tell you how it all unfolded. So when I was working in my previous organization, I used to advise a lot of financial institutions on how should they recommend a financial product to their clients.
I see.
So in one of those client meetings, what I saw was that a 60-year-old guy walked into a large financial institution wanting to just a simple fixed deposit. But he was sold a ULIP policy. I'm talking about 2009-10 when the charges were very high. So as high as 40-50%.
Oh.
Which means if someone would invest 50 lakhs, that would become 25 lakhs the very next day. That got me thinking. And with having spent so much time in finance, having studied finance, why am I not meeting investors directly and helping them take educated decisions? That was the point when I decided that I need to start my own company and I need to make investors aware as to how can they at least have a dialogue with the investor instead of just being sold a product and having a monologue. And that was the point when I realized that this is my calling in life. Yes, my life was very comfortable. Yes, I had a regular income. But I thought that outside this comfort zone is where the real growth happened. And if I can help some Indians earn financial savings better, that will give me much more happiness than the current state that I am.
What a noble thought. Even the name of your company, SubhShanti, very Indian. In today's world, people try to make it global, but you have kept it so Indian. What is the reason? What inspired you? And what is the vision of your company?
Yeah, so it's obviously a topic which is very, very close to my heart and the name which is close to my heart. So since we are a ethics-first, client-centric wealth management firm, we were looking for a name which always reminds us to stay connected to the root, to always think about our investor first, to be transparent, to be honest. And we were thinking of a name which will always keep us reminding that you need to stick to why you started this firm.
Okay.
Hence, we kept the name as SubhShanti Wealth, where Subh is my grandfather and Shanti is my father.
Okay.
And we thought that there cannot be a better name than this if I have to stay true to why this firm was started and continuously keep uplifting investors in India and help them grow their wealth in an unbiased way.
That's a beautiful story. I'm sure your father and your grandfather must be very happy. But you didn't tell me the vision behind the company.
So when we were starting the firm, we thought we would want to impact at least a lakh. And if I had to impact so many lives, the central theme around which investment philosophy or investment themes works in India or anywhere in the world is trust. So if I have to develop trust, we have to work in a way where people look at us as a safe option. So if I ask you today, if you were to say invest somewhere and bank is not an option, what would probably be your first option to go to?
With my lack of knowledge, I would probably just select LIC.
Yeah, so that is what most Indians do. They normally go to LIC because they feel their money will be safe.
Correct.
Very few people actually realize the returns on their traditional policy is anywhere between 6 to 7%, which is at best inflation returns. So if we can build a perception around Indian households where if they want to invest their money and they find SubhShanti as a safe option where money can also grow at more than inflation rate, then I think we will be able to justify why we started this firm, and the vision for us will then be fully justified, where we will be able to help an average household to invest their money in a much better and optimal way.
I see. So you spoke about beating the inflation with our investments.
Yeah.
Why is that so important?
So if you look at purchasing power of money, so if you were to run a household today, and if you need say 75,000 rupees to run your household today, 10 years from now, you will need at least 3 times more money to have the same household expenses.
The inflation, of course.
That is what the inflation is. So if your money does not grow at more than inflation rate, you will never be able to uplift your standard of living. And you will continue to live the same way. Apart from this, there are a lot of other expenses. So the inflation we talk about in India is just household expense. But if you look at say education or lifestyle, where we talk about brands, the inflation actually is 12-13%. So actually every year you get poorer by investing in certain fixed instrument products. So it's very, very important for anyone to at least beat inflation and sustain their standard of living, if not increase it.
That's a very new perspective you've given me. It's actually food for thought. You're trying to tell me that if my savings don't beat the inflation, I'm getting poorer every year?
Yeah, that's correct.
Ooh, that's really something to think about. So SubhShanti Wealth has already become a recognized name in the financial landscape. And I believe there has been many awards that the company has received as well.
Yeah.
But for listeners tuning in for the first time today, why don't you tell them what SubhShanti Wealth is all about?
So SubhShanti Wealth is a client-first wealth management firm where we help investors understand about the nuances of investing. We help them manage the ups and downs of market. You will be surprised to know that we are a zero sales targets firm. So one of the very few wealth management firms in India which do not have any sales target for any of their sales representative. Now,
Oh, really?
yeah, that's very true. It's difficult to believe, but that is how we believe is the best way to operate. Because the moment people have targets, mis-selling might happen. So the only target we have in our firm is the number of meetings that they're supposed to have. So there are no sales target in terms of the revenue that they're supposed to generate. Also, what we have done over the last 10-12 years, we have built very strong research capabilities in-house, which have helped us navigate the markets in a much better way and create substantial alpha over what index have generally generated.
Right.
What we have also been able to successfully do is, while the products give return, very often investors do not make returns. So I'm very happy to share that investors who have stayed with us for more than 7-10 years have generated a return of close to 18% on their equity portfolio, which is much higher than what Nifty has delivered over the same period. Also, what we have done is we have been able to build a tech stack for our operations to give a seamless experience to our customer, where now the service quality has gone up at least 5 notch higher, and whatever service queries are raised, we are able to resolve them within 24 hours, so that our investors feel that they are important and they do not have to wait for a very long time for their query to be resolved. There are a lot of other points, but I'm sure this should help.
Yes, in fact, your way of thinking, your ideologies, they are very different from what we see in a general businessman. So tell me something. If I were a new client and I were to walk into your company, what kind of experience or transformation do you think I would walk out with?
So before I tell you what your experience with SubhShanti Wealth would be, let me tell you what is the broad structure of wealth management firms in India.
Okay.
So there are 2 broad categories of wealth management firms in India. One is which are tech-based, where most of the people go online, invest on their own, and they do their own research, and they feel that is the best option for them to invest in mutual funds and other products. Then there's a traditional brick and mortar system where there are relationship managers who have sales targets, and they go and sell the financial products that is recommended by their team. In both the cases, there are certain issues. So in the first structure, where people take online decisions or which are tech based, they are mostly well funded. So because there are investors involved in that, they have to show month on month, year on year growth. The second one obviously has a huge cost structure with huge infrastructure, huge RM costs, and so they have to sell products on a regular basis. What we are trying to build is the third type of company, where there are no targets. We keep the structure, cost structure low, that allows us to be transparent, honest, and recommend customer the product that they actually need. So, where as a new investor, if you come to us, you will not be sold any product. You will be educated on a lot of parameters that you should look at investing. You will be educated about the risk and return of the market. You will be educated about how markets have behaved, how SIPs have behaved, and how the investment behavior should be. After which, you will be equipped enough to understand whether you should invest with us or not. So what you will walk out with is a rich wealth of education and not just a product being sold to you.
So education seems very central to your company's ideology. You have built SubhShanti Wealth in last 15 years. So I want to know how many lives you've impacted and how do you measure the influence on your clients?
So over the last 12-13 years, I'm very happy to share that we have impacted more than 1260 lives whom we have helped start investing in a proper way, and we have created substantial wealth for them. What is even more heartening is this has happened across 14 countries and not only restricted to Indians, but all of them are Indians. Well, there are NRI customers that we cater to, and they have been able to give us the joy, and we have been able to help them achieve the goals that they wanted to achieve in their life. As far as creating impact in their life, how do we measure it? I think a lot of people measure it through different lenses. How we measure it? We look at an investor behavior. So if you look at an average investor in India, their holding period is not more than 12 to 15 months. An average investor with us stays for almost 7 to 10 years. They do not redeem any money for 5, 7 or maybe 10 years in certain cases.
Oh wow.
Which is the basics or essence of wealth creation. If I look at the number of times they look at their portfolio, not more than once or twice a month. So we are a big advocate of letting investors know that if you look at your portfolio continuously, you will actually not make great returns. So we tell investors that don't look at it on a daily basis. And very happy to share, we actually track this number. Not more than 25% of our investors look at it more than twice a month.
Okay.
So what basically we are trying to do is, since behavior plays a very, very important role in wealth creation, we are trying to make them active passive investors. When I say active passive investor, you would be thinking, what does it mean?
Yes, of course.
So they invest in active funds, but their behavior is passive in nature.
I see.
Yes. So if you look at these parameters, these are the impact that we have been able to create. Apart from getting them more disciplined, apart from getting them more frugal with the way they spend their money, but these are the 3-4 points that we have been able to instill in them, and because of that, they have been creating substantial wealth over the last 10 years. So the common thing we say to our investor is, while investing is a skill, time is the secret that helps you compound your wealth.
I see. If you have clients who are invested in the market for 5 to 10 years, I believe that's quite an achievement.
Yeah.
Because I also, invest here and there a little bit, and I have a group of friends who are quite into investments, but I do not know of anybody who's been in the market for that long. So that's commendable, I must say.
Yeah.
So now, let's take a step back to the beginning of your journey. How did all this start? Surely it wasn't easy for you. How did you ever convince somebody to become your first client?
So, that's a very emotional question. Every time I look back at my journey, which started about 11, 12 years back, obviously it makes me very proud, but it also gives me goosebumps, when I think about this journey. So, about 12 years back when I started this journey, I had no idea that journey is going to be so difficult initially. With no specs, no beard, at 28, people were actually not taking me seriously. And, to view you as a consultant, it was very difficult for them to accept. And I'm talking about 2011, 12, maybe 13.
Because you were such a young boy.
Yeah.
I see.
But 11, 12, mutual funds also were not very prevalent in India. The industry was just taking off.
Yes, very true. Yes.
We had just about, if I remember correctly, about 1 crore investor in a country of 140 crores who were investing in mutual funds, unlike 5 crores today. So obviously the journey was not very easy. But what I realized is that this is a business of geometric progression, not arithmetic progression, where not only knowledge compounds, but trust also compounds. So I have to take it slowly, and I have to build a business which will take maybe 3, 5, 7 years, because this is a business of track record. So the turning point happened in 2014. But before that, between 11 to 14, I really had a very difficult time. So I did cold calling, I did door-to-door selling.
Oh, wow.
I actually sat at the canteen of an MNC, just selling one SIP in the day. So those were the difficult days. But post 14, or in fact end of 13, I managed to convince a lot of my clients, a lot of people I know, to invest in a small cap fund, because small caps were really, really cheap then.
Okay.
And that changed the trajectory of my profession. And very happy to share, since 14 we had a rally, and I never looked back from there. And then it's been very, very smooth. But yeah, the first 3 years were difficult. But what I realized in the process was that trust takes time, and trust has 3 elements to it. So it's the character that you have, it's the competence that you have, and it's the, if I can say, the connection that you have.
Okay.
And over the last 10, 12 years, I'm very happy that I have been able to walk the talk, have been able to demonstrate the competence that the firm and I have. And hence we have built the connection. And hence today, I'm very, very happy that I am in this industry helping Indians fulfill their dreams. And really, really happy that I took that decision 12, 13 years back so that I can be in this position. And this is just the beginning, because the financial landscape in India is just starting. Financialization of savings is happening. And over the next 10 years, only the mutual fund industry, forget the alternates and other industry, are going to become so much bigger that really sky is the limit for us to expand, grow and help Indians make more money.
I'm sure it is, because you said from 1 crore investors, now we have come to 5 crore investors, which is quite a big jump in about 10 years time?
Yeah, in about 10 years time. And I'll give you another number. We have more investors in Bitcoin and Dream11. So, Indians generally want to become richer fast.
Right.
Whereas mutual fund as a product make them richer slowly but surely. So there are about 2,000 books on Warren Buffett. But no one has become another Warren Buffett, because no one wants to get rich slower. Everyone wants to get rich faster. So that is what we are trying to do. We are trying to tell them that please don't look at making money, look at creating wealth.
Right.
And real wealth creation happens after 7, 10, 15 years. That if you look at Warren Buffett, the majority of his money that he has made has come after he's 60.
Oh, okay.
So similarly, people, if they can take a slightly longer view, I think they can do wonders with the wealth they can create. Just to look at mutual funds from the time they have started. An SIP of 50,000 rupees started in 1994, the 30 years.
Okay.
On a monthly, if someone had invested 50,000 rupees, that is valued at close to 100 crores today.
Wow.
But how many Indians have actually earned it? So no Indian I know has earned that. And it's a very, very simple, easy, short way of making a good amount of money. I'm not saying you'll make 100 crores, but you will still make more than any other place you will. So our job as a distributor is to ensure that investors stay for longer and do not keep on moving between different products, different instruments, because very often they make losses. And if we can act as risk managers first and distributor later, I think we will do a great service to them and help them create much more wealth.
So from your conversation, I get this, that patience is the key to investment.
Yes.
I see. In every reflection that you're doing, in every conversation that you are doing regarding yourself and your company, your ideologies I can see, and very well, which actually feels nice to know that there is somebody in the market who's here to truly help you build your wealth, and not just money in the short term or some profits. That's really, really nice to know. So I'm curious, what does money really mean to you? And how has the meaning of money changed over time for you?
So, money for me is the security that allows me every day to get out of bed and tell myself that I can do whatever I want.
Okay.
So that is what money means to me. But in general, people do crazy things with money. People actually do crazy things with money. That craziness happens because people have actually been raised in different economies, in different cities by different parents with different level of income.
True.
Okay. So what might seem crazy to me or to you might actually seem very sensible to me or you. So what actually is crazy to you might not be crazy to me. In fact, might look very sensible to me.
Yes.
So the concept of money is very different for everyone, and there are no wrongs and rights.
Absolutely.
What I've understood over a period of time is that it's an evolving topic, and the environment we grow up in is the learning we take, and that is how we view money as. So if someone who is born in a not so wealthy family, for him probably safety would be the first measure. For someone who has taken or who has been brought up in a very, very rich kind of environment, he will be a risk taker.
Right.
And he will be able to deal with money differently.
Of course, the risk capacity is higher for them.
Exactly. So money has different language. It depends on who you are, where you have been brought up, what has been your parents' relationship with money.
Okay.
What have you seen money as when you were a child and when you were growing up? And that is why it's very different. But money is very, very subjective, and it's very, very different for every individual. So that has been the biggest learning over the last 10 years, that money cannot be shared in a particular color.
Okay.
But everyone have their own beliefs, and we need to respect their beliefs and maybe guide them to a better belief, which will help them create more wealth.
Okay. So what are some of the common myths or mindsets that people have in relation to investment? Something that is hindering them achieve that wealth.
So when we talk about the common myths that people have, so if you look at different products in India, if you look at, say, a real estate, if you look at, say, a gold, which is doing very well now, if you look at equity, if you look at fixed deposit, people generally feel that they make more money in real estate.
Right.
Because they actually don't know how much money they make. Okay, if you look at an average real estate holding in India, they don't make more than 4-5% over a 10-15 year period. But because they look at it from a square feet, for example, they tell 10,000 square feet is now 20,000 square feet over 10 years.
Right.
So that's 100% return for them. But if you divide it into a CAGR per annum basis, that is hardly 6% return. Okay, so if you look at the demat account of an average investor, it doesn't mention CAGR return, it only mention absolute return.
Okay.
So one of the common myths that people have is that they make more money in other financial instruments than mutual funds. The other beliefs is that fixed deposit is very safe. But
which it is, isn't it?
Yeah, it is. But if you look at it this way, that you are surely going to lose because of inflation. Because if inflation is going to rise by 7-8% and your everything gives less than that,
of course, I'm getting poor.
Yeah, but because it's a notional loss, people think it's okay. And also, as per RBI now, your money is protected only till 5 lakh rupees. So even if you have 1 crore rupees, if a bank goes bankrupt, luckily it has not happened in India, you only get 5 lakh rupees.
And the rest is washed away?
Yes, its rest is what. So also a lot of people think that credit space is very safe to invest in for 5 years, 10 years. They may or may not be the case. But without getting into technicalities, I think these are some of the common myths which people need. Also, people think that trading makes a lot of money. If you look at SEBI report, almost 85% of people don't make money by trading, and almost 10% make FD returns.
So the other day I read somewhere that people enter into trading for quick money and lots of money.
Yeah, but they end up making a lot of losses and fast losses.
So I understand that different people see money differently, different people perceive money differently, and the value of money is something for someone else, and it could surely be something for someone else. So you, Sandeep, how do you plan for such different groups of people? Because at the end of the day, the goal for each one of them is same, to make more money.
Yeah. So as you rightly said, the goal for everyone is to become wealthier. But they want to become wealthier to become happier.
That's true.
Okay. So happiness is a complicated subject.
Mm-hmm.
But the common denominator to become happier is to have control over life. Some people seek control over life with financial freedom. Some seek control over life when they spend more time with family. Some seek control over life in some different way.
Okay.
For us, our job is to convert that into numbers, draw a plan for them, and help them achieve it. So what we do is, we let them speak out their sense of happiness and their sense of control.
Right.
And once they're able to do it well, we help them articulate it in numbers, and help them achieve it.
So it gives me a sense that you are helping people take control of their lives,
Yeah,
fulfill their dreams.
absolutely.
Right.
Yeah.
Yes, I mean, if I can control what kind of holiday I'm going on, what kind of mobile phone I'm using, or what brands I'm using, of course it will give me that sense of fulfillment and that sense of happiness.
Right.
So now, this brings me to my very last question. And this is a soulful one. If there is one thing, one message you could give everyone that is about money and life, what message would that be?
So, how I look at it is, Indians are normally hustlers by nature. They like to work hard. They like to be busy, but they don't let their money work equally hard.
As hard.
Yeah. So, my advice to them is that there's a beautiful product, mutual funds, which you can use to multiply your money, and you need not work so hard. So even if you have money, you don't use it properly. So, what I would want to tell them is that make good use of the money you earn, because your salary will not make you rich, your investments will. And if you don't use it wisely, you will keep hustling all your life. You will take stress all your life. You will not be able to give time to your family. And you can solve all this by investing the correct way. So I have a humble request for all the investors out there. Don't let your salary do the talking. Let investments do the talking. Create real wealth, and you will live a stress-free life, and you will be able to give more time to your family, friends, and have a much better work-life balance.
So I'm taking one more learning back with me today. I love the line that you said. My salary will not make me rich, but my investment will. I'm surely gonna think about investments myself, Sandeep. And I'm not talking about trading. I'm talking about pure, long-term, focused investment.
That will be great.
So, before we end this session, I have a small surprise for you. I've prepared a little game for you.
Yeah.
And I hope you're okay to play with it.
Sure.
Awesome. So this is a game called Would You Rather.
Okay.
I'll be giving you two situations and you need to choose one out of them.
Okay.
Just make sure you're not diplomatic. I want true answers from the heart.
I'll try my best.
Like how you've been talking until now. So first question, let's shoot. Would you rather retire at 40 with say about 10 crore rupees, or would you choose to work till 60, 65 and earn say about 15 crores, 20 crores and then retire?
So, because this work is my passion, so I will never retire. But I planned for my finances when I was 21. So at 45, I will have my FIRE number achieved. And I can retire, but obviously I won't, because I love what I do.
But that doesn't answer my question, Sandeep. I asked you to choose any one of the two.
Yeah.
So 40 with 10 crore
60.
rupees?
I will. So whatever options you give me, where the working life is more, I choose that option always.
So it seems like you're a workaholic.
Yeah.
Okay, now I have an interesting question for you. Would you rather have a client who trusts you blindly, completely, but never really follows through, never takes your advice, never works on the advice you give, or have a client who questions you time and again, over and again, but also follows through?
I think the second one, I'm very happy to help people who have questions, because it shows their eagerness to learn.
Okay. And also, like you keep saying, education is so important to you. So probably this was an easy one for you.
Yeah.
Now I have a question which could be difficult for you to answer. Would you rather have a one-on-one mentoring session with Mr. Warren Buffett, or would you choose Mr. Elon Musk?
That's a difficult one.
Yes, I thought so.
But I would probably go with Warren Buffett, because my mind is more structured the way he thinks. So I think I'll be able to connect with him better.
Okay. So are you trying to say that Elon Musk is super unstructured, all over the place?
So I'm not saying he's unstructured, but probably for me it will be difficult to understand the way he thinks. and obviously he's a super guy, done great stuff. But maybe for me, Warren Buffett is a bigger right.
I see. So now tell me, would you rather go back to the past and tell your younger self one investment mistake that you made, or would you rather fast forward to your older self and take one financial tip from the future?
So I think I'll pass this question because if I go back to my previous, I was thinking that what I would have changed in my investing journey. Maybe I could have invested a little more, but mostly whatever ideology I have, I think I've stayed true to that. Maybe I could have taken a little more risk.
Okay.
But mostly it's in line with what I think is the right way of investing. So I'll go back to my past and telling that maybe you could have taken a little more risk.
Okay. So now tell me, would you rather have your investments in a safe banking account and earn 1% per annum on them? Or would you rather, but remember, this is your emergency fund. Or would you rather put your emergency fund in the mutual funds where you're getting great returns, but of course there's always a little risk?
So, financial discipline is the cornerstone of any good investment plan. So I will not touch my emergency fund and I let them be earning less returns and do not disturb them.
So you're trying to tell me that we all should have an emergency fund and have it safe, super safe,
yes.
even if it is getting me low returns.
Right.
Okay. That makes sense because in today's time, things are moving at a pace where every minute change is constant. And yes, I believe with the kind of news that we read every day where jobs are getting laid, people are getting laid off, jobs are no more there in a blink of an eye, I believe emergency funds are important as well. So now I come to my final question, but it's a fun one. Tell me, Sandeep, would you rather swap your date nights for candlelight home-cooked meals and save, say, around 20,000 a month? Or would you rather cut down on your investments yet keep the date nights on?
So I think I'll keep the date nights on.
Oh, really?
Yeah.
If your wife is tuned in, I'm sure she'll be very happy to know that.
I'm sure she will.
What's the reason behind that though?
So because I started investing early, I've already saved a lot of money. So for me, saving more may not be so relevant as the experience could be.
Sandeep, thank you so very much. Not just for the knowledge that you shared with me today, but for the intention behind everything that you shared today. It's really rare to hear a money man talk so much from their heart, to be so human, especially in this world of AI today. It was really a heartfelt conversation with you. Thank you once again.
Thank you so much for having me. It was indeed great to be here and share my perspective. Even if one investor benefits from it, I think the purpose will be served. And looking forward to helping as many investors and Indians as I can. Thank you so much.
I'm glad to know that. To everyone listening, thank you for starting this journey with us. This is just the beginning. And if you felt anything that you could relate to, do us a favor, subscribe, like, and share with your friends, with your partner, with your parent, or with anyone who you think needs a little bit of advice or push for investments. Because wealth isn't just built alone. It isn't just built in a day. It takes time and it takes a community to build wealth. Thank you.